every single year. Thousands of professionals, they leave an absolutely absurd amount of money on the table.
Oh, yeah. A truly massive amount.
Right. And we were talking about dedicated professional development funds here, like
Oh.
money that employers have explicitly set aside, to pay for their teams, to learn, to get certified, and just advance their careers.
Exactly. It's earmarked money.
Yeah, the company actively wants to pay for it. And the employee desperately wants a certification. But somehow the employee often just ends up paying out of their own pocket.
Which completely defeats the purpose of having those corporate development programs in the first place. I mean, why even have the budget?
Right.
But it happens constantly. And what's wild is it usually doesn't happen because of, like, budget cuts or a lack of managerial approval.
No, it's much more mundane than that.
Yeah, it happens because of a missing digit on a tax form or maybe an email sent on a Friday at 5 p.m. instead of, say, 4:45 p.m.
That is the incredibly frustrating reality of corporate admin.
Okay.
And honestly, that brings us to the core mission of our deep dive today.
Yeah.
We are looking at a very specific set of source materials from PMI, that's the Project Management Institute.
Mm-hmm.
Specifically, we're unpacking their invoice modification and corporate billing protocols. Now, I know that phrase sounds like painfully dry.
It's a mouthful, for sure.
It really is.
Yeah.
But this is the literal mechanism you have to understand if you want to get your employer to actually foot the bill.
Right. It's essentially the plumbing behind the payment. And, nobody really wants to think about the plumbing, right?
Definitely not.
But if you don't understand how it routes the water, you're the one who ends up taking a cold shower. And in this scenario, that cold shower is a $500 charge on your personal credit card.
Ouch.
Yeah.
Okay, let's unpack this because the core scenario in our sources is incredibly common. So you have a PMI account, right? And you're going for a certification.
Yeah.
Your employer has agreed to pay for it, or maybe they already paid, like a generic invoice. But now their accounting department is coming back and demanding that you retroactively change the invoice details so it officially reflects the company's information.
Because corporate accounting departments operate on strictly enforced compliance rules. I mean, they cannot just accept a generic receipt with your personal name on it and call it a day.
Right. They can't just hand over the corporate credit card and say, have fun.
Exactly. They need an ironclad audit trail to prove to their own tax authorities that this was, in fact, a legitimate business expense.
Okay, that makes sense. But you can't just send PMI customer service an email saying, hey, Acme Corporation is paying for my exam. Please update the bill.
Oh, no, that will get you nowhere.
Yeah, the source material outlines a really rigid framework for making this swap. They actually require 7 specific pieces of information. It's like you have to pack this highly specific corporate go bag just to talk to them. And looking through this list, it really feels like they fall into 2 completely separate buckets.
They absolutely do. And honestly, looking at it through that lens is the best way to understand the logic of the whole system. The first bucket is entirely about your professional identity.
Okay, identity.
Yeah, so PMI needs your specific PMI ID, the exact product you're purchasing, and the amount.
Wait, let's pause on the product requirement for a second because the sources list quite a few acronyms. It's not just asking for a certification.
No, it's highly specific.
Right. You have to specify if it's a general membership or an entry-level cert like the CAPM or, the gold standard PMP or even one of those highly specialized ones like the PMI PBA for business analysis. But, why do they need that level of granularity if the price is already on the invoice?
Well, because those different products map to entirely different internal revenue streams and credentialing databases within PMI.
Yeah.
But more importantly, and this is the key part, it ties back to that concept of professional identity. Think about it. Your company is paying for the PMP, right?
Yeah.
But your company does not own the PMP.
Oh, wow. That's a really great point. Like if I quit tomorrow, my PMP comes with me. It belongs to my brain, not my boss's filing cabinet.
Precisely. So that first bucket of information, your PMI ID and the specific certification product, it basically forces the system to anchor this financial transaction to a human being.
Ah, I see.
Yeah, PMI has to fiercely protect the integrity of the credential. They need to know exactly which individual sat for that exam and earned the right to use those letters after their name.
Okay, so that is bucket 1. We can call it the identity bridge. But then we have bucket 2, which seems to be all about corporate liability.
Yes.
Because to get the invoice modified, you also have to provide the company name, the company address, the company contact details, and crucially, the tax ID or GST number.
And that tax ID, or GST, which stands for Goods and Services Tax, basically the international equivalent for value-added tax systems, that is the absolute non-negotiable anchor of the entire process.
I was wondering about that, actually. My initial reaction reading this was to question if that was just total overkill. Like, is it really necessary to have all of this just to change a name on a bill? It feels like overkill, just to say, my boss is paying.
Right.
If PMI has the company name and their address, isn't that enough to issue a receipt? Why demand the government tax ID?
Well, what's fascinating here is that a company name is actually incredibly fragile data.
Fragile, how do you mean?
Think about how many variations exist for a single company. Is it Acme Corp? Or is it Acme Corporation LLC? Maybe Acme Global Solutions.
Oh, right.
Yeah. If a frontline customer service rep types in the wrong variation, it might look totally fine to you on the PDF, but it will get instantly flagged and rejected by an automated corporate auditing system on your employer's end.
Oh, I see where you're going with this. It's like a routing number on a check.
Exactly.
Like you have the name of the bank and your account holder, but you're missing just one digit of the routing number. The financial system literally cannot process the transfer. It doesn't know where to assign the money or the liability.
That is the perfect analogy. A tax ID, or a GST number, is a unique, legally binding identifier registered with a government authority. It just removes all ambiguity. When PMI modifies that invoice to include your employer's tax ID, they are no longer just updating a receipt. They are creating a legally binding financial bridge between your personal professional achievement and your employer's corporate tax return.
Because the employer is treating this as a tax-deductible business expense. I mean, they aren't paying for my PMP out of the goodness of their hearts, right?
Rarely.
They're reducing their taxable corporate income by investing in employee training.
Exactly. And to claim that deduction legally, especially in international or cross-border scenarios, which is where PMI operates a lot, the invoice must reflect their exact corporate reality. If you're an employee in London and PMI is processing this in the US, the cross-border tax compliance requires that GST number to prove exactly where the service was rendered and who is liable for the tax burden. If that number is missing, the bridge collapses. Your company's accounting software will simply reject the invoice to avoid a compliance violation.
Okay, that makes complete sense of the tax ID. It really is a legal bridge. But what about the final item in that second bucket? The company contact details.
Yeah.
If the accounting software is handling the tax ID, why on earth does PMI need the name and email of an actual human being at my company?
So that is a fail-safe against unauthorized corporate spending.
Oh.
Yeah, imagine a scenario where an employee uses a corporate credit card without proper authorization to buy a certification course, and then they ask PMI to modify the invoice to make it look like an approved corporate expense.
Sneaky.
Very. But 6 months later, when the company conducts an audit and queries the charge, PMI needs to be able to point to exactly who authorized the modification at the corporate level.
So you really aren't just changing a name on a piece of paper. You're basically drafting a highly specific multi-party financial contract. Like PMI provides the service, your employer assumes the financial liability, and you are the designated beneficiary.
Which is why missing even one of those 7 items means the system rejects your request by default. You just cannot build a bridge with missing steel.
Right. So as a listener, your first operational takeaway here is that you need all 7 pieces of data in hand before you even open a chat window or draft an email. Your PMI ID, the specific product, the amount, the company name, address, contact person, and that all-important tax ID.
You have to have the whole go-bag packed.
Exactly.
Yeah.
But as I dug deeper into the source material, I realized that packing the go-bag and gathering the data is really only half the battle.
Oh, absolutely.
Yeah.
The execution phase is where things tend to fall apart for a lot of people.
Right. And here's where it gets really interesting, because it pulls the curtain back on how digital businesses actually operate behind the scenes. The sources explicitly state that to make this invoice modification happen efficiently, you must contact PMI between Monday and Friday from 9 a.m. to 5 p.m. Eastern Standard Time.
Ah, yes. The classic rigid banker's hours.
Yeah, which feels almost archaic, doesn't it? I mean, in an era where we can buy stocks at 2 a.m. on our phones or, have algorithms instantly approve auto loans, why does changing a name and a tax ID on a PDF require you to sync up with a 9 to 5 schedule on the U.S. East Coast?
It does seem outdated on the surface, but if we connect this to the bigger picture, it reveals the fundamental difference between frontline, generalist customer service, and specialized financial operations.
Okay, how so?
Well, most large organizations operate frontline support on extended hours, sometimes 204/7. These are the generalists. They have the system permissions to help you, say, reset your password or point you to exam study guides or just answer basic FAQ questions.
But they don't have the permissions to alter financial contracts.
Precisely. In corporate IT infrastructure, this is governed by something called role-based access control, or RBAC.
Or BAC, right?
Yeah, you do not want a massive, globally distributed team of frontline generalists having right access to your core financial ledger. The risk of fraud, compliance errors, or simply messing up a corporate tax ID is just far too high. So the ability to modify an invoice and reroute tax liability is restricted to a very small, specialized payment team.
And specialized financial teams do not work overnight shifts on the weekend. They work core business hours.
They do. So when the source material emphasizes that 9 to 5 EST window, what they're really saying is this is when the people who actually have the database permissions to solve your problem are sitting at their desks.
Okay, I love an analogy. So it's like calling a restaurant at midnight. The answering service might be 24/7. They can take your message, they can tell you what's on the menu, but you aren't getting any food because the chef isn't in the kitchen.
That's exactly it. You need the chef. Or to use your earlier analogy, it's like trying to catch an express train just before the doors close. If you hit that 9 to 5 window, you're on the express. The chef is cooking, the train is moving.
Right. But what happens if you miss that window? Say you live in Sydney or London, or you just decide to tackle this administrative chore on a Saturday morning. The source material says your request gets escalated.
Right.
And we usually think of an escalation as a good thing, like you're being bumped up to a manager to get a problem solved faster. But here, the source explicitly states that an escalation takes 3 full business days.
Yeah, in the world of internal corporate ticketing, escalation rarely means faster. It usually means your request has been placed in a holding pattern.
Why 3 whole days, though? I mean, if I email them at 8 p.m. on a Friday, why doesn't the payment team just process it at 9:05 a.m. on Monday?
Because you aren't the only one emailing them at 8 p.m. on a Friday.
Fair point.
Think about the mechanics of this. When you contact a frontline agent outside of those core hours, they cannot process your request. So they have to generate an internal ticket using a system like Jira or ServiceNow and route it to the payment team's queue.
So it's essentially a digital inbox for manual overrides.
Exactly. Now multiply your single request by thousands of global professionals doing the exact same thing over the weekend. When that specialized payment team logs in on Monday morning, they aren't just looking at your ticket. They are facing a literal mountain of weekend escalations.
Ah, I see. So the 3-day window isn't like a punishment for missing the 9 to 5 deadline.
No, not at all.
It's a service level agreement, an SLA. It's the finance team saying, based on the sheer volume of backlogged manual overrides we receive, it will take us roughly 72 working hours to batch process the queue and finally get to yours.
That's it entirely. The system is highly efficient if you interface with it while it is fully staffed and active. But the very moment you step outside those designated hours, you are subjected to the friction costs of internal routing, queuing, and batch processing.
You're stuck on the local train making every single stop.
Exactly.
The source material is surprisingly blunt about this reality, actually. It notes the 3-day wait and literally just says, quote, which sucks sometimes, but it works.
I love that quote.
Right. Which honestly should be the official slogan of global corporate bureaucracy.
It really should. It's an undeniably accurate assessment. It is a slow, manual workaround for a problem that requires specialized human oversight, but it does ultimately achieve the goal.
But those 3 days can have massive consequences for the listener. I mean, if you are up against the end of a fiscal quarter and your employer's accounting department says, submit the modified invoice by Friday or we won't reimburse you, getting caught in a 3-day escalation queue on a Wednesday afternoon means you are missing the deadline.
Which brings us right back to the very beginning.
Yeah.
The employee ends up paying out of pocket for something the company had already budgeted for.
So what does this all mean for you, the listener, trying to navigate this process? It boils down to 2 critical operational rules.
2 rules, yeah.
First, treat your data gathering like a formal corporate audit. Do not approach PMI until you have the exact product name, your PMI ID, the transaction amount, the company name, the address, the contact person, and most importantly, the exact verified tax ID or GST number from your finance department.
And please validate that tax ID with your internal accounting team before you submit it. If you give PMI a typo, they will process it, and your company will reject it anyway, forcing you to start the cycle all over again.
Yeah, nobody wants to do that twice.
Yeah.
And the second rule is to aggressively manage your time zones. You have to synchronize your request with the active hours of their payment team. Before you make the call or open the chat, calculate exactly when it is between 9 a.m. and 5 p.m. Eastern Standard Time.
Yes. Do the math.
If you hit that window, you're speaking directly to the people with the system permissions to execute the change immediately. If you miss it, you are automatically damped into a 72-hour batch processing queue.
And, as we wrap up our analysis of these protocols, it raises a broader, almost behavioral question that I think is really worth pondering.
Ooh, what's that?
Well, we've just spent this time dissecting the immense rigidity of these 7 requirements, right? The strict necessity of aligning with the specific time zone and the automatic 72-hour penalty for missing the window.
Yeah, it is a significant amount of administrative friction for what seems like a simple update.
It is. And in behavioral economics, there's a concept known as sludge.
Sludge, like the opposite of a nudge.
Exactly like that. Sludge is defined as excessive administrative friction that prevents people from getting what they want or what they are legally entitled to.
Oh, man. Like those mail-in rebates where you have to cut out a tiny barcode and mail it within an exact 14-day window, knowing half the people will just forget and the company keeps the money.
Exactly like that. Now, I am not suggesting PMI or corporate accounting departments are doing this maliciously. As we discussed, they have very real compliance and tax auditing requirements that dictate these rules.
But the outcome is the same, regardless of the intent.
Precisely. The outcome is sludge. So the provocative question is this. How much do modern corporations quietly rely on this sludge? Employers often boast about their generous professional development funds to attract top talent, but given how complex the reimbursement process can be, requiring employees to act as an intermediary between 2 rigid financial systems, how many millions of dollars of that allocated training budget simply goes unspent every year?
Wow. Because employees just get overwhelmed, miss a deadline, and decide it's easier to pay the $500 themselves rather than fight the bureaucracy.
Exactly. It makes you wonder if bureaucratic friction has accidentally become the most effective cost-saving measure in corporate professional development.
That is a brilliant, if slightly depressing way to look at it. The vault door isn't locked. It's just so incredibly heavy that most people stop trying to push it open.
Yeah.
But for you, the listener, you now know exactly how the mechanism works. You have the blueprint. So gather your 7 pieces of data, check the Eastern Standard Time clock, and go get your reimbursement. You earn the certification. Make sure the company pays for it.